Hi friends, Daniel here. Welcome to the 2021 Q3 market updates where we'll be looking at what has happened over the last 3 months. Here are the standard disclosures. I will not bore you with the details. Moving on. Now these are the topics that I want to cover today, mainly the summary of the findings before we go through the details of the investor sentiment as well as the technical analysis. Without further ado, let us go through the summary first. Now let's start off with a quick recap on what we've discussed on our last semi-annual review. Now based on the findings, we previously expected the price to decline due to the fact that the current market valuation is overvalued by both standards, the fundamental as well as the technical analysis, right? As a result, I've initiated a portfolio rebalancing to reduce our overall risk exposure by sidelining a portion of our investments into safer asset class, predominantly the use of the money market fund. Since then, the global equities has experienced a 1% decline, while the Asian equities had experienced a 10% decline in prices. Moving forward for quarter 3, the findings are as follows. Generally, there is a rising pessimism based on the investors' sentiment as well as the business managers' expectations towards the economy as well as future market developments. From a technical analysis standpoint, the global markets is also showing signs of weaknesses, but there is no clear evidence of a trend reversal. On the other hand, Asian equity is currently experiencing a short-term bear market, and its prices are expected to decline further in the near future. Overall, the global equities market is at an inflection point, right? Nobody knows what's going to happen, and there's simply not enough evidence to point to either direction, be it upwards, downwards, or even a sideline market. Though, I still anticipate a correction in the market simply due to the fact that the global equities is severely overvalued based on both fundamental as well as your technical analysis. Okay? The Asian market, on the other hand, is expected to enter into an undervalued territory if prices continue to decline further in the near future. So what's needed to be done? As of now, nothing is needed on our end because things are moving as per expectations, right? Though I will start to initiate to buy the dip if the Asian market enters the undervalued territory. I will be creating another video for clients only to talk about what our next step would be and what are the respective entry points that I'm currently looking at moving forward. So for my lovely clients, please watch out for your personal messages. Now with the summary out of the way, let's get into the details, right? Starting with the investor sentiment. For investor sentiment, there are 4 main indicators that I'm basically tracking. So let's go through them one by one. The first indicator that we'll be examining is the AAII Investors Sentiment Survey. Now this is a survey that is done regularly to measure the mood of individual investors and where do they feel that the stock market will be in the next 6 months. Now, as at 30th September, 28% of the respondents are bullish, while 40% of the respondents are bearish towards the markets, whereby the remaining respondents are somewhat neutral. Right? With regards to the behavior, I think it's evident that the number of bullish respondents had fallen drastically since July, while the number of bearish respondents had increased drastically as well. On the other hand, the number of neutral participants had remained rather consistent over the last 12 months. Overall, based on the mood of the survey respondents, we can infer that the pessimism within investors' communities are rising. Now, this indicator is often seen as a contrarian indicator, where if the majority thinks that the market is going to go up, probably the market is going to go hit, right downwards, vice versa. Hence, the takeaway from this sentiment is that the market will either move sideways or it will continue to go up despite the rising pessimism. The second indicator that we'll be examining is the CBOE total put call ratio. Now, this indicator is somewhat similar to the AAII investor sentiment, where it measures the overall mood of the market. However, instead of it being a survey, this indicator measures the action that's being taken by market participants based on their view of the market moving forward. Long story short, an indicator of 1 is neutral, above 1 indicates pessimism, and below 1 indicates optimism in the market participants. Just as the AAII is seen as a contrarian indicator, This CBOE total put call ratio is also seen as a contrarian indicator. And as the finding indicates rising pessimism, the takeaway is that the market is probably going to continue its upwards movements, or at least move sideways, as generally the market participants are often wrong with regards to their investment views. Take note, however, both the AAII as well as this CBOE total put call ratio is only a measurement of what's happening in the US market, right? There's no Asian counterpart or Asian survey to measure what people are feeling with regards to the Asian market itself. Now, the third indicator that we'll be examining is the volatility index. Now, what you're looking at here is basically the volatility measures for US as highlighted in blue, as well as China as highlighted in orange. Now, based on the chart alone, I think it's pretty evident that over the last 3 months, the volatility level for the China markets had spiked up pretty drastically, while the US volatility is beginning to experience an increase in volatility in the month of September. Now, generally, the findings for both the US and China market make sense, given the influx of undesirable news in China and the lack of either positive or negative news development in US over the last 3 to 6 months. The last indicator that we'll be examining is this thing called the Purchasing Managers Index. Now, the PMI index is an index that's created by surveying businesses for their thoughts on the prevailing direction of economic trends in both the manufacturing as well as the service sector. Basically, an indicator above 50 indicates optimism, while anything under 50 indicates pessimism, right? So from a quick overview of the global, the US, Europe, and China's PMI, I think it's quite evident that the values had been deteriorating since May 2021, right? While the readings for the global US and Europe are still slightly above the 50 mark, the readings for China market is currently below 50, probably due to the regulatory crackdown as well as all the power outrages that's undergoing or happening in China itself. Overall, the findings for the PMI is that while managers are still currently optimistic on the prevailing direction of the economic trends, this optimism is starting to wear off, right? It's starting to deteriorate. And the significance of this is that it may result in lower spending and investment made by businesses and made by these managers in anticipation of an economic slowdown, which ironically will cause the economy to slow down further due to their action, right? Now that covers the investor sentiment. Moving on to the technical analysis. For starters, let us take a look at the price behavior of the global equities as represented by the S&P 500. From a long-term price action perspective, we are still currently trading way above the long-term trend channel that is highlighted in green. For prices to come back down to its normal trading levels, it will represent a price decrease of about 15 to 30%, right? If we were to zoom into the recent price actions, you will realize that prices had continued to make new record highs over the last 2 months. However, all the gains had been erased over the month of September. In fact, the price action had actually broke through the short-term trend channel resistance line that is highlighted in blue, which is a test of whether or not the current upward momentum can be sustained and can be continued. The relative strength index had also deteriorated significantly since the start of September and is currently trading at near oversold levels. The Klingler oscillator had also painted like similar picture, whereby the readings had deteriorated significantly and is currently trading, or rather indicating, a bearish development. Now, based on the analysis, we are able to conclude that the S&P is already long due for a correction in terms of the long-term price action. While it has yet to happen, the short-term price action is exhibiting signs of weakness as the price level is testing the short-term trend channels. This is further supported by the confirmation in the relative strength index as well as the Klingler oscillator indicators. All in all, has the short-term bull trend of the S&P came to a halt? The answer is not yet, right? While there are signs of weaknesses and a slowing momentum, we simply do not have enough evidence of price actions to signal a reversal in the trend in the short run. All that being said, my stance towards the global equities as well as the S&P had not changed since a year ago. right? I still feel that S&P is overhyped and is priced for perfection. And will that be an evident crash? I doubt so, because currently there's no triggers or no events that may cause a widespread panic and pessimism which may trigger a sell-off resulting in a switch of trend, right? However, a slow price decrease over the next 12 months or a sideline market is more likely as we experience a correction by time, whereby prices remain stable or decreases while allowing for the earnings to catch up, right? While allowing for fundamentals to correct itself over time. Moving on to the price behavior of the Asian equities. Now, unlike the S&P, which is way overhyped, the price behavior of Asian equities is currently trading within its long-term trend channel. Now, this is a good sign, at least from a long-term charting perspective, because it means that price actions that we are experiencing today is normal and within the long-term expectations. If we were to zoom into the recent price actions, you realize that ever since April, the Asian equities had failed to continue its bullish trend that is highlighted in blue, and is currently experiencing a short-term bear market, as seen in the trend line, or rather the trend channel that's highlighted in red. Now, the momentum of the Asian equities had also weakened from May to August, though for some reason the Klingler oscillator is currently indicating a bullish market after experiencing a significant improvement from the month of August. The relative index, or rather relative strength index, on the other hand, is still currently trading below neutral region. Alright, okay, so what you realize is that there's a mismatch when it comes to these two momentum indicators. And this does raise an eyebrow considering the fact that the Asian prices are currently trading at a fair valuation given its recent price decline and its recent developments. Now, based on the analysis, we are able to conclude that the Asian market is currently experiencing a short-term bear market. Though interestingly, the momentum indicators are singing a different song, which is important because it may be a sign of a weakening bear market. With the bear market in Asia continues, I suspect that given the current price development, it is reasonable to assume that the prices will continue to decrease further given the current pessimism that's surrounding the region, as well as the potential correlation with the global equities and the S&P when they themselves correct to a normal level, right? Now, that being said, as Asia is currently trading within fair valuations, any further price decline will push the market down to an undervalued territory. Investors should be prepared to experience further price decline in their Asian equities, but at the same time, it presents an opportunity to buy the dip and participate in a long-term growth story of Asia at a discount when Asia enters its undervalued territory. Now that concludes the Q3 market review. Thanks for sticking around the entire presentation, and if you have any questions, you can text me directly and connect with me on the following platform as well, and also drop me a sub on YouTube to keep up with future updates. Now, all the links will be provided in the description below. Stay safe and I hope to hear from you all soon.